Yeah, now we're talking back to work. Back to work Thursday evening already. It's the 7th day of April, 2022. My name is Joseph. And as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades setting up for Friday's trading session. I got a great video for you guys and gals tonight. Charts are all ready in the background. As you can see, we got the oil, got the Nasdaq, and we got the S&P on our radar for tomorrow. Lots of great trades setting up for tomorrow. Got a nice little short squeeze coming off these lows. Got those ranges to work with. Boy, oh boy, I'm excited. Got a lot of great trades we're going to cover tonight, so you're ready for Friday's trading session. I'm going to cover all my favorite trades in tonight's video. That way you can finish off the week firmly in the green. And of course, you know me, I'll also make sure we cover any traps to avoid, any curveballs to avoid, because yeah, Fridays always have a couple tricks up their sleeves, don't they? So I want to make sure you guys know what to avoid to keep that money and what trades look the best for tomorrow. I'm going to cover all my favorite trades in tonight's video. Now, before we jump in and get this party rolling, got a lot we're going to cover tonight. You better subscribe to our YouTube channel. Make sure you subscribe. I publish my best trade ideas every evening right here on this newsletter video. I don't want you to miss tomorrow night's video, so make sure you subscribe. Hit that bell icon. Set those notifications because a lot of this stuff is very time sensitive, so make sure you subscribe by the end of the video here tonight. Also, if you have any questions for me, drop those questions in the comment section. I do personally answer all the questions myself. I may not get to them right away, but I get to them eventually here. I'll get caught up here this week, but drop those questions in the comment section. I'll get them answered for you as soon as possible. And you know I appreciate you tuning in tonight. I appreciate you guys supporting this YouTube channel. If you enjoyed the video as much as I enjoy making it, do me a favor, hit that like button for me. I appreciate you guys carving some time out here for this nightly newsletter. But enough of the intro, right? Friday is right around the corner. These charts, they ain't going to trade themselves. Where's the money going to come from? Where's the low-hanging fruit? Where's the easy money? How are we gonna finish off the week here firmly in the green? Well, boy, you'll notice everything is pretty bullish right now. We have, again, kind of a short squeeze coming out of, basically coming into this afternoon's trading session. What is really, really cool about these charts tonight, and I really have a kind of a treat for you guys tonight, because we have ranges. You'll notice there's a range here, there's a range here, there's a range here. Ranges are magnets. Ranges love to rotate. And I'll tell you right now, we have three markets. Each one of them is in one different kind of progression of the rotation process. So obviously, look at the S&P. The S&P is bullish. And of course, look at the S&P is further along than the Nasdaq, also bullish. And of course, the oil, also bullish. So, boy, I'll tell you, you guys, there's going to be a lot of learning opportunities tonight. There'll be a lot of earning opportunities for the trade room tomorrow. But I'll tell you, everything's bullish right now, so which means we're definitely looking for some pullbacks and, of course, breakouts, because we got last week's close. Right? Last week's close. You got to think these magnets up here are going to try to drag this market higher here. But, it's a range. It's a range. So you better believe I'll be talking about reversals back down, selling off these highs. So we're going to slice and dice this up tonight. You guys are in for a really good treat because we have some ranges, and each one of these markets are kind of at a different stage of that short squeeze. So really a ton of learning and most likely earning opportunities if you stick around and watch the entire video. Now, tomorrow's a Friday, so Fridays are always a little bit of not a different day, but what you got to remember is that the same reason why you want to get out of the office on a Friday is the same reason why the markets kind of are usually a smaller window of opportunity on a Friday. Now, we never know what we're going to get, especially in the world we live in right now. So what you want to remember about tomorrow is, I'm not going to say you can't trade too late in the day, because you definitely can. What you want to remember about a Friday, and really this goes for every day of the week, and that is trading is a lot like riding a bicycle. It's easier when it's moving. So, typically speaking, things will slow down on a Friday morning. There's no major news tomorrow. There's no major news tomorrow. So really at this point, we're really listening in. Will we hear anything more out of the Fed? boy, we have the Fed speakers. The Fed speakers have been everywhere this week, right? Bullard, Evans, Harker. I mean, you name it. Every single Fed speaker lit these markets on fire this week, talking about how bad inflation is, as if the rest of us didn't know that was already going on. But the Fed is definitely something that we're watching very closely right now. It feels like there are a bunch of algos out there right now. Every time a Fed speaker says hike, right? It's like Fed speaker hike, sell, buy, right? There's a lot of jumpiness off those, which are creating some really great trading opportunities. That is definitely something we're watching for here tomorrow. There's obviously nothing on the schedule for Fed speakers tomorrow, but we're watching those real-time news data, watching our news feeds, watching for any Fed speakers hitting the microphone and getting ready on that. And then we'll see if we hear anything more about Ukraine tomorrow. We're definitely in what appears to be a holding pattern right now, but this is not done yet. If there's a peace agreement signed, or if there's some fallout and violence kicks back up, that will ripple through the markets tomorrow. So no major news. Will we hear? You can almost guarantee there'll be at least a couple Fed headlines tomorrow that will shake things up, and hopefully we will hear some good progress in Ukraine. Hopefully we can get some peace back in that area. But remember, if things are slow tomorrow, trading is a lot like riding a bicycle. If we're getting good consistency, if the wheels are moving, we'll keep trading. And you can trade as long as they keep moving. If they're not, if things are slow and sluggish, you got to remember, right, just that bicycle metaphor, it's going to tip over. It's going to be a lot less reliable. So keep your eyes on the personality. Fridays are all about personality. Don't force it if things are going slowly on a Friday. If they're moving well, then we can definitely push it and find more trades. I always tell my students in the trade room, don't spend your bullets on bad trades on Friday afternoon, late in the day on Friday. Save it for that following Monday. And next Monday or next week, we have a holiday shortened week because next weekend is Easter weekend, which means we have Good Friday off next week. So next week we have a scarcity week, which means there's one less day, which means these markets will be great to trade next week. So you better come back and see me next week as well. But let's figure out how to make some money tomorrow though first, right? I don't want to throw cold water on a Friday, but again, just be aware, Fridays usually are a smaller window of opportunity. Get the money when the markets are moving, when they're slow, stay patient. All right, let's go back to our charts here. S&P's ready, Nasdaq's ready, crude oil is ready. Now, remember, whether you trade only one of these markets or you trade all of these markets, there's going to be learning opportunities throughout the entire video here tonight. I'll provide different trade variations, different alternative setups, different things to learn. There'll be learning and earning opportunities on each one of these charts tonight. If you're serious about your trading, if you're trying to make money every day, you definitely want to watch this video all the way to the end, all right? I'll be keeping it spicy all the way to the end of this video here tonight. All right, let's jump into the S&P here first. We'll start with the Emini S&P. What's the most important thing happening right now on the Emini, right? What do you think is the most important thing? Well, there's really, let's see. There's probably, well, there's two main components. One is the trading range. And so we know that ranges, they rotate. They love to act like magnets, and they rotate. So we recently had that push down into the low of the range, and now the market is rotating as we go higher. Okay, you'll notice the amount we go below the range is pretty much equal at this point to the amount we went above the range. That's a very big clue. It's a very, very big clue there. You'll also notice too, and I kind of overlaid this, you'll notice that we have kind of the top of that trading range, and we're sitting right there right now on almost as if it's like an area of support, right? What is prior resistance becomes an area of support. Now, this is a really, really big clue when you look at it compared to the Nasdaq. Again, like I said, each one of these markets are in kind of a different phase of their rotation, and this is a great example of a market that is above that range high and can use that range high as a level of support for a breakout pullback. Okay, that's one, I think, really key component of this is the range and the fact that we are at the pendulum swing, but also at an area of support using that range resistance as support now. Second thing here, strong move. That's a very strong move right there. What do we always say whenever we see a strong move in one direction? We know the odds are very good. At the very least, we retest the high. At the very most, we see a breakout going higher. Okay, now think about how this now kind of applies to the range. We have a very strong run higher, and so we know the odds are pretty good that even though there's a range down here below us acting as a magnet, the odds are pretty good we're going to eventually end up back to retest the high. So now this area right here becomes a really, really desirable location. And of course, you can see I've got a little channel drawn up here, and so this area seems to be very, very attractive here for buyers. They have all of that momentum. Right? All that momentum going for the bulls. Now, at the same time, though, you'll notice that pendulum is still right here. So we haven't quite cleared, you know what I mean? We're very bullish right now. Great spot to be a buyer. But again, I don't know. We're not quite there. We're not quite there yet, right, out of this range. Now, one more thing. Look left. Remember where we are right now. This is a really big turning point. As you can see, this is a really big turning point. Prior swing lows, prior lows, we're right there right now. So you have to think, if we can get through this area, remember, anytime we go into the end of the week, usually that Thursday, Friday trading session, last week's close becomes a really, really big magnet. And you'll see that on all three of these charts here tonight. So I definitely think, I guess those are three components we have here on this chart right now. We're very, very bullish. But we have support levels here, but we're sitting at what would be considered a pretty strong resistance area here for these bears trying to go back down into this trading range. So knowing all these key components right now, we know the buyers would love to buy this pullback, right? We know the buyers would love to buy a breakout going up to that last week's close. We also know the sellers have plenty of options too. For example, if we can see a double top, we can look for a double top reversal. We talk about how much I love double top reversal all the time on this video. Okay, we can also see too, if the market was start to grind down here, I'll bet you'll start seeing some traps above those highs. Right? So we definitely have ways to sell this thing as the market goes lower. If we end up all the way back down at these lows, okay, this is where we start looking for long side trades up around back into that trading range. We look for breakouts going lower. We know where the buyers want to go if we break out high. I got a pretty good idea where the buyers want to go. I got that prior week close. I've got this 45.85, which doesn't seem very realistic tomorrow, but who knows? And then where would the bears want to go? The bears, they want to get back down to retest that low. If the party really starts to crank to the downside, we get some more major lows down around 44.05, right? That's another big support level down below. So how do we make some money on this? What do you think? Well, let's talk about if we go lower. Okay, because this is kind of the area where, and again, this is a really key difference between the S&P and the Nasdaq. For example, we know we're very bullish right now. So we know that buyers would love to buy off of this low. But at the same time, we're into pendulum resistance. We're into major resistance, right? So what do we got to worry about? We got to worry about the bears trying to short this sucker back down into that trading range. This is exactly where we look for one of those one try, two try, trap in all those bears, right? Get all those bears roped in, get them right around that moving average. And what we do is we simply wait for that nice signal and we buy right into those stop losses. Right back up, take some profit targets off, back up at that high. And if you have an extra contract for it, I would definitely leave that runner up to that prior week close from there. That's one really, really effective way we can buy this thing as we pull back here. Now, let's say for example, we get that long trade. We pull back, bears once, bears twice, we pop back up. Now we retest the high. What do we always say? Mission accomplished, right? Mission accomplished. Now let's sell this thing back down again. We're still very bullish though. So how do we do that? Okay, this is where the money is. These are great sequences, so make sure you pay attention right now. Again, we're very bullish right now. The range below us is the magnet. Let those buyers try once. Let them try twice. I'm going against momentum at this point, which is why I need to let them try twice. I let the bears try twice here because I have that range resistance and the range magnet below us. So we have to kind of really, we got to be careful. We got to really make sure they wrap that rope around their neck. Let the buyers try once. Let those buyers try twice. Once they try twice, now we can sell with that failure. Now remember, your job is not done yet. Now what you want to do is find a new channel drawing off that low, mark it up around those highs, and then look left. Find some of those prior swings over here. And then what do we always say? The first test is the best test. So we have a 2-try failure off the high. Okay? Again, 2-try failure, buying off the low. 2-try failure, selling off the high. Then we drill down to our faster time frame, and we look for a trap setup, a failure setup, a pullback combination setup. Now, guys, I know most of you have already taken the free trading course on our website. You've already learned all the setups. You know the rules. You've seen the examples, right, that we have in that free trading course. But I'll tell you, if you're one of the few people who haven't taken that course yet, or if you're here for the first time right now, if you're sick and tired of missing the best trades each day, I'll put a little link up here for you in the upper right-hand corner for our free trading course. I'm going to give you the entire roadmap that we use every day in our trade room. You'll learn all my favorite entry setups, the rules, hundreds of examples of how we apply those setups. And then, and most importantly, if you're like me and you hate missing big winning trades, or you're taking too many losses, or you're making too many mental mistakes, or maybe you just want a good roadmap to follow each day, that'll give you an easy roadmap to follow, get you to start making money again on your account, and get you ready for trading that same strategy with us in the trade room. So that way, the next time when I say, all right, double top into 1, 2, failure into first test is the best test, you're going to know, or trade the turn, as we say, you're going to know the patterns we're going to use to buy it, the patterns we'll use to sell it, and the patterns we'll use to roll it back over into that trading range. Now, a few more here on this. What I think is another really great setup here is, let's say now we pop, we drop down, but now instead of bears trying and failing now we start to roll lower. This is a really nice short. I like this one a lot as well. Let's say it starts to grind down here as it goes. Draw a trend line right off that low. Bring it right up around that major top. And it gets the same idea. Once I find a channel, I always start to look left and find some of these prior swings. And then that's usually where the best money is. We will go above a prior swing. That will also give us above the moving average. When we get above the moving average, we can get the buyers now trying to force that reversal, and we can now sell into those stop losses. These are really powerful setups because, again, what you're doing is, once this thing starts to roll over, momentum turns. Everybody wants to sell off the high of that. So again, the trap is always the best one. Sometimes we don't get the trap, though, to be honest with you, right? Sometimes there is no swing to use. And so we have to use that failure. We get above it, the buyers come in, they try, and we hit them literally selling right into those stop losses, and then grab it again for that pullback combination. Now, where's the target on this? Here's an easy way to figure it out. We know where the market wants to go. We know kind of where it wants to go, okay? But we also know the first leg is usually pretty equal to the third leg. So again, we know kind of where the market wants to go, but I'm a very big believer in being precise on your exit targets. You'll make a lot more money in the long run if you strategically take profit at certain points. And in my experience, I've only been doing this almost 15 years now, not forever. There are plenty of people out there that have been doing it longer than I have. But in my experience, the first leg and that third leg are usually pretty darn reliable. Every once in a while we see second and third leg are symmetrical. We saw yesterday on the crude oil. But that's a good way to do it there. Now, I would also think too, if this market was to roll over, right? Let's say it is to just simply roll over here and make that strong run down. What you want to do at that point now is you want to start trying to kind of reverse engineer that channel. Let's say it rolls over here, right, and starts to run down. Again, if we start to grind, we'll find that channel here. What I'll typically do in these scenarios is if it just punches and runs lower like this, now I'll look left over here, little wick bottom. I'll find that new channel there, bring it up around that high. Let me draw that. See that little wick right there? I'll go looking for these wicks. Usually those wicks are where you'll find these channels, and then you'll get, again, off the lows, up at the high, wait for that pullback. This will almost always go above the moving average. That's where that failure comes in, and you'll learn a lot about these failures in that free trading course, right? And again, we know where the market wants to go at this point. It wants to take off down to those lows, okay? Now, as we go, if we go all the way back down to that low, let's talk about that in the Nasdaq, okay? Or maybe the oil, because Nasdaq and oil are a lot, they're not as far down the road here right now. All right, let's talk about that. We'll talk about how to buy this thing right off the oil or the Nasdaq as we go. Now, what's the breakout look like? Because this is the market that really has the most juice to it right now. If there's one market right now that's, well, and again, who knows what's going to happen tomorrow, right? We're not in the prediction business. We're in the reaction business. But if I had to guess, for what I know right now, it looks this is the one that has the most potential to break out, because it's the one that's broken to the pendulum swing. It's above that prior high. It's okay. So now we get that two-try failure, that move back up. Here are a couple different breakout patterns that you want to think about. One is a short squeeze. Absolutely. Last week's close is right there. Strong move up, shallow pullback, higher high in price. What we always say, traps, baby. Traps, baby. That's the trap setup you want right here. So again, strong run up, opens up in Asia, pops up, strong run up, shallow pullback, lower low in price. That trap, that's a money trade. That is a very good trade there. Also at the same time here, let's say we go up, take that high out. The buyers come in, they pull back and they hold the pullback. They don't go 1, 2 and fail. They don't go 1, 2 fail. They hold that pullback and they jump off that moving average. We call these 1, 2, 3 breakouts. Now you'll notice I'm not trying to go something like this. If the market runs higher like this, I'm not really interested in these big channels. Big channels, they just don't work very well. What is momentum? Momentum becomes too much when it pulls back to those big channels. So if we do end up pushing higher here, there's a good chance we're going to see a smaller channel. And the smaller channels are usually the ones that will give you better results. So we take out those highs. The buyers come back, they pull back, and they jump off the moving average. 1, 2, 3 breakout. We then mark up those highs. We mark up that low. We drill down to our faster time frame. We look for traps. We look for seller failures, right? They're trying to come in and sell that thing short. We're looking for failures and pullback combinations. First leg, third leg, as we go. All right, guys? So 1, 2, 3 breakout as we go higher. 2 try breakout as we go higher. I've got a couple more breakout patterns we'll talk about as we go deeper into this video. I just want to make sure right now we keep this thing going. All right, guys? Got a pretty good plan of attack here on the S&P. We'll see if these buyers have the cojones here to get this thing moving here. How about some Nasdaq? Now, this is where it starts to get fun here tonight. So now you've seen kind of the largest progression of rotation of this video. Now look at the Nasdaq here. It's kind of the same thing. At first glance, you're like, oh, it's the same chart. But no, it is not. It definitely is not. What's one giveaway? Oh, yeah, we definitely have the range. You can easily see that. The range acts as a magnet, right? We know the buy zones, sell zones above and below. We definitely have a strong move. There's no doubt about that. It's a very, very strong move here on the Nasdaq. But what's the big giveaway? Well, look, and again, I know this shouldn't be green right now. It's kind of a resistance zone. But remember, the S&P was all the way above this area. So that's why I said the S&P seems to have the most ability here right now to hold and keep going. This Nasdaq doesn't have any of that, which means I definitely don't want to be buying this thing right now. That's a much well, it may work, but it's one of those it's one of those 40-60 trades. You know what I mean? You'll probably see quite a few of them that are winners, but if you took every single one of them, you would lose money. There's a very fine line between a 60-40 trade, which you do want to take technically, and a 64 and a 40-60 trade. This is a 40-60 trade. We don't have enough momentum to really give us, well, let's put it this way. We need to give the buyers a reason to want to buy that pullback. So we're definitely not there. We're definitely not there yet. We're definitely rotating off the low, but we're just certainly not there yet. So at this point now we've got a little more, well, just different game plan here on the Nasdaq. What do the buyers want to do? The buyers have to be kind of careful right now. The buyers can wait for proof of that move, and they can buy that pullback there. That'll be enough momentum at that point, just like we talked about in the S&P. The buyers could also wait and buy off this low, which is definitely something you want to look forward to, because again, double bottom and double top reversals in ranges are really good money-making trades. How about the bears? What do the bears want? The bears have a lot of options right now, right? We can look for that double top reversal here for the bears, right? The bears can also sell this move coming back down to retest that low. We'll talk about that here in a second. And, in all reality, if the market was to run up, get that pull back, that double top into that pendulum swing. This is just like the S&P. This area here is another prior low. Okay, so the S&P again is way up here right now. So you have to think, if we go all the way up, retest, and then dump it back down again. So a lot of that will apply that we talked about there on the S&P. All right, as we go higher, as we go lower, how do we trade this stuff right now? So again, really the one key difference on this is that I'm not really interested in the buy side here right now, right? At least not on the low of this channel. What I would like to do is, like I mentioned before, is I'd like to see some other buyers try to get in. I'd like to see this thing start to roll over here and then start to dig into that channel, find that channel high, get some of these buyers to come in and start to grab some of those traps off the high of that channel, right? We know where the market wants to rotate. It wants to rotate back down to those lows. So if I can see this market start to kind of dribble lower here, draw that channel down, remember, the easier money, the better money here is usually going to be those traps. As the market rolls off that high, we start looking for those traps. That's usually the safest place to get in short. We find those areas of resistance, find those hidden channels, and grab those traps. It's one of the easiest ways to make money when you're rotating off of that high here. Again, as the market rolls lower, if it was simply really start to grind down, again, keep that channel relatively tight. At that point, trend is very, very strong there for the bears. That trap above there, failure, pullback combo as we go lower. We take out that low now. How do we buy off that low? How do we buy off it? Well, what you want to remember is when we have all of this momentum, and you can see this one was a V-bottom low. These V-bottom lows, unfortunately, you can't tell which ones are going to V-bottom and which ones will go back and retest. The problem is the ones you don't take are going to V-bottom on you. The ones that you do take, right, the ones you do buy are going to come over, they're going to stop you out, and then they're going to go without you. It's just kind of the way the markets work. The markets have a bit of a sick sense of humor like that. You know what I mean? So V-bottoms are really tough. V-bottoms are one of those trades where you've either got to really be a gambler on it, or what I always recommend is just wait for your setup. There are too many good trades to take than to have to force trades on V-bottoms and just gamble on it. Anyways, we find our way back at that low. Here's what you want to think about off this low here. If we make it back to that low, remember all of that momentum says now remember here, real important. We had a range at the beginning of the day today, right? Notice how this market breaks down and then V-bottoms up. Okay, now I want to think about it now. Now we're coming way off the high and coming down. Okay, see the difference there? There'll be a whole lot more momentum in this market when it gets back to those lows than it was right here. Right? Because we didn't rotate off the high. The same reason why there's a lot of momentum for the bulls right now is the same reason why there'll be a lot of momentum for the bears. So as we go lower, if we go lower here, if we can make it down to these lows here, remember the best odds of success of buying off this are to wait for a retest of that low and then look for the long. Okay? You can get a lot more aggressive on that. So here's two ways to do it. One, we take out that low. We still need to use the two-try failure, but you really want to look for what I call a crown reversal, which is basically a two-try failure with a little trap below that low. Okay, this will really bulletproof you to make sure you're buying at basically the lowest possible price. The bears will come in, the bears will try to sell high. So when you're getting in, buying that trap on the way back up, you've got this little bit of open space to work with. And so it's one of the reasons why that trap works so well, because by the time we get back to these highs, where you have the risk of another shot going lower because bears want to come in and sell high as we go, you're already making your money. You've already got your first target by that point. Your stop starting point of entry at that point, it's all gravy at that point. If it wants to roll over on you, okay, so oh well. You know, you made your money, the first target, but at least you're not just buying way up here, right? Because again, it is so bearish. So I'm going to do it. Now remember, when these things trap low like this, when they trap low like that, they oftentimes will shoot up, and you'll oftentimes get a new channel. Draw off that high, draw off that low. And again, I love traps, but it's all about that first test off of that low. Again, could be a trap setup right here, could be a failure pattern, could be a straight pullback pattern off of that low. Okay, that's one kind of scenario to keep in mind here. Another one would be, we take out that low. Right? We take out that low. The bears come in, they pull it back, and they retest that low now. Now what we can do, we can get a lot more aggressive. Now the bears try once, the bears try twice. A trend line will be enough at that point. You know what I mean? We don't need that trap because now the bears, they already got theirs. You know, they got their money. They've taken their profit now. We now want to rope in the rookies. Okay, these are the rookies right here. These are not professionals. Professionals, they're not selling that, right? The pros will sell this one, but they're not going to sell these. And so the rookies that now come in and try to short these things twice, they're not using a big stop. They don't have the account size to protect themselves and sell more as it goes higher. So the stops are sitting right here now, and now we can go with that two-try failure. All right. If this is making sense right now, if you're enjoying this video, do me a favor. Let me know in the comment section what the most important part's been. What's been the biggest takeaway from these videos for you this week? I would love to know that in the comment section so I can keep on doing more of that for other new people that come in and new traders who want to learn and earn with this as well. And while you're down there, make sure you hit the like button for me. If you're enjoying the video here, you're still watching right now, you're exactly the person why I do these videos every evening. So again, we retest that low, one try, two try, stops are sitting right above that high, and again we're buying it now right into those stop losses. Then again, mark up that new channel, and we trade the turn, right? Maybe it's trap, a failure, a pullback combination. You'll see a lot of examples of those trading the turns as you go into that free video course that I mentioned earlier. Okay, how about a breakout going lower? How would we sell it as it goes lower? I think we'll cover that in the oil. Okay, because oil is a little bit earlier in this progression, right? So again, if we go higher here right now, if we blast up and go higher, what's the game plan? The game plan at that point now is to go out, find these channels, wait for that pullback, trap in those bears, and retest. Okay, almost identical we just talked about in the S&P. Okay, and then at that point now, remember it's 1, it's 2, it's failure, and we trade the turn. The two-try failure. The first test is the best test. Is this all ringing a bell? Right? Two-try failure. Again, trap, failure, pullback pattern off the high of that channel. Okay? And then how about a breakout? How about a breakout going lower? Going higher? We talked about that pop up. Buyers come in. They hold the pullback, and they blast. Right? 1, 2, 3 breakout. Didn't do it here yet. If we can get it popped up, if they can hold that pullback and jump off moving average, that's exactly when we start getting aggressive. We find that new channel. We don't look for these huge channels. Okay? Forget about this channel if it does that. Okay? Don't waste your time on the big channels. Focus on the small channels. They'll give you the best entries, and they'll get you in when momentum is good. Okay? So 1, 2, 3 breakout into that first test is the best test. Or maybe we jump, right? Big strong move higher here. Strong move up. Shallow pullback. Higher high in price. Traps, baby. Remember, even though we're into an area of resistance up here, that momentum, when it's that strong. Now remember, with this pattern, you have to get that strong move, that shallow pullback, and that higher high in price. Like this one back here, this is a small difference. Strong move up, shallow pullback, lower low in price. There's a trend line coming right down here. that's another reason why it's a bit of a gamble here right now, trying to buy that pullback off this channel. Okay, so strong pop up. And then also, too, this will also apply to the S&P as well. We've got that last week's close, short squeeze. So imagine now we pop up and it's low volume. It's a Friday morning. It's no major news. Nobody's heard from anybody yet about any, Fed hasn't spoken yet. And we start to grind. That grinder is the giveaway. Mark up that high, mark up that big low, drill down, find those first test traps. First test trap into that failure pullback combination. First leg, third leg, leave that runner up to that last week's close. All right. I'm sure there are going to be a couple more variations on this, and we'll definitely cover that as we go tomorrow morning. But this will give you guys a good roadmap here for now. Let's keep going. Here. We'll save the best here for last on the crude oil. What's the oil up to here tonight? What's the oil up to here right now? Now, oil, and again, what a treat in this video tonight, because now we're seeing this full progression. We had the S&P. The S&P was all the way up here, right? The Nasdaq is a little bit off that high. Oil just getting started, just getting its mojo going on. So what's the most important thing right now on the oil? Oil, of course, right? Oil, you can see there's your range. No doubt about that. Market makes that big drop, and we talked about these expanding triangles throughout the week this week. We know these areas are really common reversal points to go back up into a trading range. It's very likely we have these buyers rotate from one extreme of the triangle all the way to the other extreme of that triangle, which just so happens to be, you guessed it, last week's closing price. So we've definitely got this market just about stretching its legs here right now. We've got a lot of potential here for the buyers. And I'll tell you, this is the only market, because the S&P and the Nasdaq, the bears have plenty of options right now. You really got to be careful being a bear on the crude oil. You really got to be careful right now, because we're not anywhere near any resistance right now. There's no major turning points in sight on this chart. And as you can see, this thing is separating off the moving average, and it's looking pretty bullish as we go higher. Now, again, could this change overnight? Of course it could. Could we hear some scary headlines out of Ukraine and everything goes crazy? Of course it could. Could there be a peace talk announcement overnight and the market sinks like a rock back to 90? Of course it could. So there's definitely some variables out there we don't know yet. But what we know right now, this looks like very much a buyer's market at this point. Now, buyers, what would the buyers want to do? The buyers would love to get back down to retest that low. That's a dream setup right there. Right? Because then, again, we know it's a pretty strong move down. You can see that, okay? That strong move down is pretty strong. So there's still a pretty good chance. It doesn't look very likely right now. But, hey, if we can get back down to retest that low, that's a great buying opportunity. I also think, too, check left, no trend lines in the way. I also think, too, that a move down around a trap below that low, I think a failure right around that channel low is a great option as well. I think as the market starts to go higher, I think a possible short squeeze with a 2-try trap is a great setup as we go higher here. And I'll tell you, this is one of those, this is an example here right now where we may also end up shooting higher and then going sideways up here. And this, of course, again, this will also apply to the S&P and the Nasdaq. Like I said, I'm gonna give you different variations of this stuff throughout the entire lesson tonight. Okay, so we go lower. All right, we go lower. Now, if we go lower here, you've really got to be. We've really got to have a definite shift in sentiment. Let's put it that way. There needs to be some really shift in sentiment if we want to sell down here. And the reason why I say that is because this is that big low from March. We talked about this last night and a couple of days earlier this week. It gets real. The deep end gets really deep underneath 92. Okay, you'll notice this right away. Below 92, we have 90, but then we literally are all the way down to 86. So there is a lot. This is that big low off that early dip, early March. Okay, so you have to think that there are a lot of speculators out there that are going to have their more buy orders just waiting underneath that 92 there for tomorrow. So the kind of the point I'm trying to make is we're looking at buyers here, and I would also imagine too, as it goes lower, this could be really, unless we have a very big change in sentiment. You know what I mean? The headlines on the newspaper are reading, they've called it off in Ukraine. Russia leaves Ukraine. We're done. Peace everywhere. That's the type of sentiment change that would have to happen here. Or some sensational headline would have to shake this thing up to the point where this is what was the point today is no longer. The world has changed, right? Is what I see as being necessary to want to sell this thing as it goes down. So as we go lower, and again, I think this setup can apply here. I think it could apply here. As we go lower here, this is exactly where we look for that two-try failure. Absolutely. Because now we've got that retest in play. So now we go in, the bears try once, the bears try twice. We know exactly where their stops are. Again, find that trend line. Find that trap below that low. Those are the more advanced entry tactics that we talk about earlier in this video. And again, you're going to see a lot of examples of those inside of that free trading course linked up in the upper right-hand corner. We're buying right into stop losses as we go. And then again, do not kick your feet up on the desk and bask in all the money you're making. Put some of it back to work and grab that first test. Grab that first test. Like I always tell our students in the trade room, you may not be comfortable with that reversal trade, or we may not even get it. Sometimes we don't. But you gotta hit that first pullback. That first pullback, especially when that first pullback is before the other side of that trading range, because that's where they want to go. They want to get back to that 98.04, in the short term. So that's a really, really good setup there coming off of that low. And then again, what you want to think about here is if they were to really run down and take these lows out, this is exactly where I was saying earlier, like crown reversal trap, okay? Or retest and then get more aggressive off a trend. You know what I mean? That's that same scenario I was just talking about on the Nasdaq, okay? And again, if things, we've talked about 1, 2, 3 breakout patterns. We've talked about pop and grinds today. We've talked about two-try traps, baby, today. We've talked about those patterns here. So if I shouldn't say the blood of the streets, but if peace rings right in Ukraine, or there's some other sensational headline, that would definitely be some reason to look for that short, going lower here. As we go higher, okay, I mentioned earlier that I really like the idea of a pullback, trapping some of those bears with a failure pattern, and then buy that failure into pullback combination. I like that trade a lot, because at this point now, again, anyone who's trying to sell this is missing the point. The range is above you is the magnet. You've got all of these lows right here. It's just going to be that's very much a gamble short right there. I'd like to play the other side of that bet. I would like to take the other side of that bet. That failure and that pullback combination, target off at the other side of that trading range, and then again, leave that runner up around that prior week close, the high of that triangle. I also think too, there's just enough space right now. If we can get this thing to pop up, strong move, shallow pullback, higher high in price, that trap. Now remember, this trap may not make you rich. This may not be Lambo, Lambo money off that trap, but it will almost always just retest that high. Take quick profit, leave the runner, see how far it'll go. Again, if we really rip, if this thing really rips and runs higher here, now what I'll do is, and again, a lot of this has to do with what it looks like, right? If it grinds as it goes, I'll just grab that trend line there, grab that channel there. And remember, I know it's scary because you're at the top of that trading range, but when you have all of that momentum, the odds are so good that at the very least, you're at least going to retest that high. And then you know the answer to this one. 1, 2, right back down in. You see how it all comes together? It just flows like this. Once you get in that rhythm, it becomes pretty easy. Okay, so that's something we're watching for as we go. And then again, I would definitely keep an eye on this tomorrow too. And we'll wrap things up with this. If we do sprint up, Remember, this whole area up here, just like the S&P and the Nasdaq, these are major resistance zones. So what may happen up here, this little area right here, okay? So what may happen is we may end up getting up here, and at this point, nobody, there's your 100, nobody dares to buy it because we're too high up. Nobody dares to sell it because we're so darn bullish at this point. And so the market just simply sits there and goes sideways. This is a very realistic possibility for all three of these markets tomorrow, especially the S&P, right? Because it's already up there, right? So how do we trade a bull market into a trading range? First of all, we find levels of support below the range, like prior swings, for example. Right? We look left, we find levels of support, we find trend lines coming up. We always want to try to combine our entry in a range, really any time for that matter, with some sort of support or resistance. So we get the bull market up into a range. Remember, if we see a new range, the new range becomes the new magnet. And this is really tough. This is one of the hardest parts about breakouts because we're like, okay, watch the range below, but then all of a sudden, no, actually watch the new range. This takes some discipline because you're like, well, wait a second, do I really want to buy down here? Isn't that range a magnet? What would Joe say right now? Remember, the new range is the new magnet. Now, there will always be an exception to that rule. But 95, 96, maybe 98% of the time, that new range is the new magnet. Okay, so I don't want to say ignore the old range, but now focus on going back into that new range. Okay, once we see it, wait for that pullback. Eventually, the buyers will run out of bullets, get underneath that range at an area of support, and use those failure patterns. 90% of our trades in a range environment are failures. Right? We wait for those break down, 1, 2, back up, right? We trade failures pretty much nonstop when we see a trading range. And then remember, if I can let's say we get up, we take out some of these highs, we go sideways up here, we find that trading range, we find our area of support below. We grab that pullback or we grab that failure, and then as it goes higher here, remember, you can almost always grab that follow-up, that little channel that comes in, that follow-up trade right there. Okay, it's a failure, and then obviously I'm simplifying this right now to save time and space in the video here, but trap setup, failure setup, pullback setup. Again, you learn the rules of those, what they look like on the fast time frames in that free trading class. And then remember, the target off to the side, and then find that pendulum swing, and that's where the next target goes for that runner. And then if they break through the pendulum swing, which happens all the time, if they break through that pendulum swing, now we go out and we execute a breakout pullback, a 1, 2, 3 breakout pattern, a pop and grind breakout, 2 try traps, baby. That we apply that setup now as we go higher. It doesn't seem realistic right now, but who knows? Who knows, right? Where would the buyers want to go from there? Yeah, 105. Look at that. All the way up there, 105 is the next level. We'll see what happens, though. But at least now we have the game plan. This is kind of the easy part. The easy part is kind of planning the trades and getting things ready for the following day. Tomorrow's when the hard part comes, right? Tomorrow's when we got to go out and trade that plan. And that's where our trade room comes in. We get together every morning. We trade it together. We learn and earn together. We have fun together. I'll tell you, if you're serious about trading, if you're a new trader trying to get a good strategy to follow and a good place to learn, or maybe you're an experienced trader that hasn't quite been able to put the pieces together yet, our trade room was designed for new and experienced traders to trade along, to learn and earn, and we have some fun together while we're doing it. If you enjoy this newsletter video, you'll love being a part of our trade room. It's a great group, get a great video course to teach the entire strategy, and of course the trade room is great there as well. Guys, don't be afraid to call the office if you guys have any questions. I'll put all of the membership links, all of the free course links, anything we talk about tonight in the video, I'll drop this right in the description of the YouTube video. Call the office if you guys have any questions. I know I do talk really quickly on these videos, try to get everything in, but we can always slow it down. Call the office, we'll slow it down. We'll talk about which pieces of this puzzle you have already. Make sure you get all the computers set up, the software ready, and we'll get you ready for trading tomorrow and every morning in our trade room. So keep in touch, drop those questions in the comments section below. If you enjoyed this video, I hope by now you subscribe, hit that little bell icon, and hit that like button for me. I always appreciate you guys tuning in and supporting this YouTube channel. Now get out of here. Get some rest. Get a good night's sleep tonight. Tomorrow is Friday. We'll make the most of it tomorrow. Again, early in, maybe early out. We'll see how the market reacts with no major news tomorrow. Remember, though, don't force those trades tomorrow afternoon. Save those bullets for Monday next week. That's it for me, guys. I'm out of here for now. As always, my name is Joseph. Be well. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.